Hi everybody, this is APRI from mychartcoach.com, and in this video we're going to take a look at the small caps. This is going to be a look at several of the small caps that were in play today. And so first up is ticker symbol NNDM. As you can see here, it was up over 101% today. This was the big winner. It had a giant gap up open, so there is a space between high of day on Friday, the top of this red candle, and low of day today. And so if you notice, the gap up open today between these two candles opened above this other gap. There's a gap in February between high of day on this candle and low of day on this candle. So the key now is to stay above this 240 support zone. If it were to drop below 240, that would be a red flag. You could see that 100-day simple moving average tested. Today's candle is floating well above that upper Bollinger Band. You have EMA 4 down here at 187. You know, if it did drop down below that 100-day simple moving average, to head higher, it has to break above this top of the gap level. That's right here around 290. And then as you can see, it hit the 200-day simple moving average at 320 and pulled back. It has to close above that level and turn it into support to make a run up to 414. Check out that big volume spike today. That long upper wick on today's candle does show dilution. All right, so they're likely selling some shares into today's run. If you look at APRI here, you can see APRI closed up 58% today. This was a really nice move. It started later in the day. I'll show you the 15-minute chart next. But as you can see on the daily chart, it had been in this tight sideways channel. And so you can see the action here was super tight. And so the breakout above the top of the channel, which was this white candle right here, that signals more upside potential. It also closed above the green line, which is the 50-day simple moving average at 31. So that was a super bullish move. Okay, so that's a strong close. Now what it's doing is hitting the bottom of the gap level. There's a gap between high of day on this candle and low of day on this candle, and so if it can bust through this cluster of candles and break through that top of the gap or bottom of the gap, then it could run up to 60 here, up to the top of the gap, and fill the gap. And so keep it on. It was really strong to the close, so it looks like it wants to push higher tomorrow. 60 is going to be a big resistance level. If it did get through 60, you'd be looking at the 100-day simple moving average at 91. Check out that big volume spike. If you look here at the APRI 15-minute chart, you can see there was a little bit of volume down here. That spike, that was your attention spike, that it was heating up down here at 11:45, and then you could see here volume started really coming in at 1:30, and then at 2 o'clock, you know, the volume really picked up as the share price got moving. And so this was a really strong move. You know, as long as it's staying above EMA 4 at 39.4, that uptrend is very strong on the 15-minute chart. Let's look at ANTH, closed up nearly 19% today. RSI is now above 50 for the first time in months, and so this is a big signal. The chart is heating up. Check out how plus DI, the green line, and minus DI, the red line, are pinched. That's a signal the bulls are heating up. And so today there was a bullish close above the middle Bollinger Band. That's the dotted purple line, currently at 26. As you can see here, the last close above that level was back here in May. It closed above, failed to hold the middle Bollinger Band, and the downtrend continued. And so if that level turns into support, a new uptrend could begin. There hasn't been an uptrend on this chart in a very long time. It's been, in the sideways channel back here in March and April into May. And so what's going on now, it's hitting the green line, which is the 50-day simple moving average at 30. It needs to break that level in the bottom of this previous sideways channel. If it can get above that 30 level, that would be very bullish. You want to see a close above that. There hasn't been a close above the 50-day simple moving average since way back here in March, before the gap down. And so that would be a big move. And then what you'd want to see is a break above the top of this channel, which was the high close here, and then that could lead to a run to the bottom of the gap. Once again, there's another gap, and it's between the high of day on this candle and low of day on this candle. So the gap zone's up here close to 60 cents. So keep an eye on it for a break above 30 tomorrow. Okay, take a look at SNES, closed up nearly 25% today. Now this stock is in a nice uptrend. It has this flag pole that it formed on the 21st, and it's got this up channel, this uptrending flag going on here. You know, it's got a nice channel coming off of the top of this, off of the 200-day simple moving average support zone. As long as that holds at 113 and the middle Bollinger Band at 119, this uptrend is intact. You can see here it bounced off of the EMA 13 at 145 today, and so you want to see that hold. And now the candles are back above EMA's 4 and 8 support. So the uptrend is intact. what you're looking for now is a close above this high close level around 205, the closing price here on the 6th, and then you want to see that hit back up to the top of this ascending resistance line, which is at 230. So those are the targets above. It will have to get above this closing price here on the 5th. Okay, so that will be a key level to break as well. And so yeah, so this is a nice move. We'll see if it can continue with this strong uptrend. Okay, take a look at PLM. Okay, this is a stock that you know, probably not on a lot of people's radar, but it is heating up. It closed up 22% today. Check out that big volume bar down here. You know, nearly 2 million shares traded for this thinly traded stock. So it was the largest volume day since back here in February. And then there was a close today above key moving averages. It started, you know, it closed Friday below the 300-day simple moving average. This blue line down here, as you can see, that had been the big support level, and then it closed above the 50 and 200-day simple moving averages. That's the red and the green lines, and so that's a really strong close above both levels. You want to see it stay above 83 now. You want to see it stay above that green line, and then what it needs to do tomorrow is break above the gold line. That's the 100-day simple moving average at 974. So if you see it trading above 98 tomorrow, that should be the signal that it wants to head higher. So we'll see if it can break through. If it fails to break that 97, 98 resistance level, the candles could work back into the bands, and then if that happened, you'd want to see that 83 zone hold. Okay, let's look at PULM. Closed up 8% today. Yeah, so this had been on a multi-day run. This is our stock from last week, and so last week we had put out alerts, you know, in our chat that you know, when it was forming during the day. The first alert came out back here when it broke this 50-day simple moving average intraday, but it pulled back. We were looking for a close above. That finally happened last Thursday, so this was the low level. So congrats to everybody that got the alert in the premium channel, premium chat, and then took action, and then it closed above that bottom of the gap level. There's a gap over here between high of day and this candle and low of day and this candle, and so that Friday close signaled more upside potential, and then today it had a nice run. It almost filled the gap today. Up here just above 70 would fill the gap. It got close and it pulled back. It did form that long upper wick, and that with the gap up open, there is a small unfilled gap below. I mean, it's micro, but yeah, you know, that gap could fill as long as EMA4 down here at 55 is holding. The chart is super strong. What you want to see now is you don't want to see it drop back below the bottom of the gap level. If it did, then it would be back in the sideways channel. It has to stay above that level, and if it does, then what you want to see is a break above the 70 resistance zone. So the uptrend's still intact. Just this long upper wick here shows profit taking and likely dilution. Notice how there was a giant volume spike, and so it could pull back tomorrow, take a little breather. You just want to see 55 hold. As long as the EMA4 is holding, the chart's still super strong. Okay, so we'll see if this can continue higher this week. Okay, look at LGCY. This is a good small cap energy stock. This is another one of our plays from last week. We like those closes above the 50-day simple moving average. It closed above here on Wednesday. Alerts were put out, and it just followed through. You know, it took that on Friday. It did form a red candle, but it was still above the 50-day simple moving average. That's that green line. As long as that line's holding, you know, it's signaling that it wants to push higher. Today, it closed above that next key level, which is the middle Bollinger Band at 663. So if that level turns into support, then it can get a new uptrend going. If you look over here, back here in March, April, and May, you can see the dotted purple line was holding, and that's when LGCY was in a strong uptrend, when the candles were above the dotted purple line, the 20-day simple moving average. And so notice when they closed below, that's when it was in a downtrend. So now today is the first close above that level since way back here on May 21st. So this is a bullish change in trend. So going forward, if it stays above that 663 level, above that middle Bollinger Band level, that signals upside potential. If it dropped below, that would signal more consolidation. Check out the green dots here. That's parabolic SAR. They did flip below today, so there was a parabolic SAR bullish flip. There was a crossover last week on the MACD 8, 13, and 5, and check out the 12, 26, and 9. It's pinched. If that crosses over, it should signal the start of a new uptrend, similar to back here in May. Okay, there was a crossover right here on this move, this signaled the start of this new run. And so if this crosses over again, that could possibly signal the start of the next run. So keep an eye on LGCY. Take a look at OPGN. So this has been on a nice move, closed up 9% today. It's getting frothy. It's at 75 on RSI, and Fasto closed at 100. And so, this is a prior level where, it's hit resistance on RSI. It's trying to break out above, but and you have Fasto at 100 since it closed at high of day. It's got a super strong uptrend going. Okay, so this is just pushing higher. It's long, basically when we have this type of pattern going and it's a swing trade, the easiest way to trade it is just keep riding as long as it stays above the pink line. Notice how once it closed above the pink line on this candle back here on the 23rd, that every single candle has a close above that level. As long as that trend continues, the signal is to keep riding. It could keep pushing higher. So that level's at 263. So that's the stop loss level if you're looking to be a short-term trader. If it drops below, that could signal downside risk, and it could pull back to that 100-day simple moving average at 235. And so it's getting ready to hit the key resistance level. There's a gap, another gap. Okay, we talk about gaps quite a bit. There's a gap between high of day on this candle and low of day on this candle. The bottom of the gap level is always a tough level to break, similar to like a 200-day or 300-day simple moving average. If this $3 zone gets hit and it fails to close above, that would signal a temporary top, and that would be a level that you would lock in gains. If it did close above, then you'd be looking for a gap fill, and you could get a run up here, into the 360s to fill the gap. There is this candle that's dipping down here, and so there would be some resistance at that level as well, around that 325 zone. So we'll see if that can keep pushing higher. So take a look at CORV. This had a big monster move today, closed up 44%. Check out that breakout above the it started out the day down here. It was above the 100 and 200-day simple moving averages on Friday. Today it broke out above the middle Bollinger Band and the 50-day simple moving average down here, and then also above the 300-day simple moving average at 252. That's the big level to turn into support on the daily chart. If the candles did pull back into the bands, you'd want to see that level hold. Check out the huge volume today, giant volume spike. And so when a stock is breaking out on the daily chart, what we like to do is look at the weekly chart to find the next resistance levels, and you can see this week it's breaking out above the gold and green lines, and so that's the 50 and 100 week moving averages. Notice how all these candles here had been hitting this green line and failed to close above. That's currently at 222. A weekly close above that level would be really bullish. Now that it's above the gold line at 271, the 100 week moving average, it needs to close above. If it were to drop below, that would be a red flag signaling some consolidation. It could turn into resistance. Check out how it hit the bottom of the gap level up here at 340. There's a gap between high of week on this candle and the low of week on this candle, and each candle on this chart represents 1 week of trading, and so it has to break through that 340 resistance level to run up to 370 and fill the gap. So keep in mind this week's candle is busting through that upper Bollinger Band, so it has a good uptrend going. It had consolidated back into the bands, held that middle Bollinger Band support, and now it's pushing higher. It just needs to stay above support and break through resistance. Okay, let's look at GEVO. Closed up nearly 25% today. It closed up 24%. It's in a nasty downtrend. It had been forming candles below EMA 4 and 8 resistance, right in that pink and lime lines lower, and today there was a close above. So if it can stay above this 390 to 411 level, if it stays above EMA's 4 and 8, that signals more upside potential. It's hitting EMA 13 at 449. So if it breaks above that 450 level tomorrow, that will signal upside potential, and we'll be looking for a run up to 521 here, the middle Bollinger Band. Last time it got up to this middle Bollinger Band level, it closed above it 2 days in a row, failed to hold, and the downtrend continued. So if it does close above and turn into support, that's when you could get a nice run up to that 50-day simple moving average. This giant volume spike last week makes this chart interesting. It looks like people were loading, and then today there's another volume spike. So volume's picking up down here at the bottom of the chart. It just needs to break through resistance. That 390 level is the stop loss level. You do not want to hold if it closes below EMA 4 on the daily chart. Unless you're long. If you're short, then you do, but not if you're long. Okay, look at NOG, ticker symbol NOG. Nice move today. It closed above resistance, closed up 7%. Notice how RSI is at 68, and it has run up in the 80s in the past. So today there was a close above the recent high close horizontal resistance level was back here in May, the top of these two white candles here. It closed above that level. That signals more upside potential. Now it's hitting the high close resistance level from January. This has been the tough level to break. When it came and hit this level a couple weeks ago, it stalled and pulled back and dropped down to that middle Bollinger Band. And notice how the dotted purple line held and it pushed back. Well, now that it's closed back above, this is our signal that it wants to break out higher. It's looking like it could bust through this tomorrow. You know, this stock has really good volume. It's in a very nice uptrend. It's performing very well. It's filled the jar back to this level. It looks like it wants to push through. If you see it trading above 290 and it closes up above 290, above, you know, in that $3 range, that's going to be your signal. Okay, yeah, this really wants to head higher. It has to close above this high close resistance level in January for that signal. PSAR bull flip, great volume, holding that middle Bollinger Band. A close below 258 would be a red flag, and that would signal it's a risk to hold. Okay, if you look at the NOG weekly chart, you can see here this smooths out the data from that weekly chart or from that daily chart, and you can see it's hitting that resistance level from back here in January. And so if it can close above that level for the week, it could possibly run up here into the 360s, and then you have that 200-week moving average at 438. A few weeks ago, it closed above the 100-week moving average down here at 213, and above that middle Bollinger Band, you know, had bounced off the 50-week moving average. It has a really nice uptrend going. It looks like it might want to break out higher and run into the threes. Okay, so let's take a look at BIOAQ. Okay, this used to be ticker symbol BIOA. It was on the big boards, and then it got delisted. Now it trades over the counter. You know, they've got the Q on the end now. The Q stands for bankruptcy. This was a stock from last week. We put out alerts last week that it was breaking above that middle Bollinger Band and heating up, and then the next day, you know, it followed through, and then it turned into this huge play and ended up having this monster run and was a huge winner. So congrats to everybody that caught those alerts last week. And then today there was follow through. You know, it was hitting that 50-day simple moving average at 2.1. A little over 2 cents there, and we were looking for a close above that level to signal it wanted to head higher. Today there was a gap up open above that level today, and it did close above. That is the stop loss level right now. If you did not exit already and lock in gains, which was our that was our alert in the chat today because of the candlestick that formed, everybody was locking them in. And so now we're looking for a reload lower. Whenever you see a black candle form like this in an uptrend, many times there's consolidation. There is that 50-day simple moving average still keeping it in play, but you can see today's candle did close well above that upper Bollinger Band. If it drops below 2.1, the risk is it drops down here to 16 and tests that EMA 4 support. Now, if it does hold 21, then it could bounce off of here, even though it was up on the day. It could hold this level, and then it could push higher. So that's what we're looking at now. We're trying to see if it's going to hold that 21 level and then make it run back up to the threes, or if it's going to drop below 21 and test 16. So it's a you know, whenever you get a candle multi-day uptrend and the candles gap, you know, the gap up open and it's floating above the upper Bollinger Band with a long upper wick and then the black candle, those are just all signals to lock in the gains. With the OTC stocks, we don't like to mess around because you know, why give the gains back on a piece of junk stock like this, right? You know, you want to trade it while you can make money. And so you can see where today it consolidated and went sideways. You know, that there was the nice gap up open, but it didn't really do anything after that. And so that was a red flag. You know, you've got let's see here. It has this descending resistance here. So you had a descending triangle type of pattern that had formed, and what happened was it broke down into the close. So you had you have descending resistance and horizontal support here from the intraday pattern, and so if it drops below this horizontal support level, the low close from today, that's going to signal downside risk, and then you're going to have the low close from the channel from yesterday, here at 245, and if it were to break below that, then that's when you could see that drop down to 15. That's why this stock got dicey into the close here. It closed below the 50 simple moving average, signaling downside risk. The trading's super tight right here. and so it could bust through resistance and head higher tomorrow. But if it fails to break back above 23, that's going to be your red flag, and the risk is it drops all the way down to 15. Okay, let's look at LINUF. This is another one of those stocks that used to be LINU, and then it got demoted, delisted, whatever you want to call it, down to the OTC, and then they added the F on the end of the ticker symbol, and that F is for foreign. And so this is a foreign company, very thin volume. Look at only 110,000 shares. You know, I put alerts out on this last week that it was heating up, but the volume was so light. Okay, I put out alerts down here when it was bouncing. You know, just that to keep an eye on it. Volume was super light. We'll see if it can do something. And then so today, you know, because we were talking about this last week in the chat, and it's just something that caught my eye, because it was a lot of times these demoted plays, you know, will heat up, and what would have to happen is volume would have to come in. But today it did close above EMA 4, and that was the move that we were looking for. So if it can get above this 25 level tomorrow with volume, it could heat up. So it really needs a volume spike to be a good stock to trade. But hey, if it gets volume and it breaks above 25, it might run up to 34, up to EMA 13. It would be really bullish if it broke above that 25 level. As you can see, it hasn't been above that level since this gap down. And you just never know with these stocks. If people start trading and the volume comes in, it could get running. And yeah, if it did drop below EMA 4 at 20, it would be a major risk to hold. You do not want to hold this stock overnight if it closes below EMA 4 on the daily chart. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. Yeah, send me. I'll give you a greeting if you come and check it out, and then yeah, you can come check out the chat. I'll give you the link to get in there. Okay, thank you.